Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency as usual. So today in the fundamental report we have tried to understand the fundamental background of the current rally that we have, not only on currencies, but also you can see the bounce on stock market. It's dropping on the interest rate yields, so rising on the bonds as well. And it was really interesting what's the reason for that performance, for this celebration. So also another question that we have trying to resolve in our fundamental view is how investors currently treat the ongoing processes in the United States economy, how they understand them and what they are expect. And the result of this investigation, actually you could read in the report, we think that investors stands too far from the reality. So the mostly some really optimistic view is prevailing in the minds of the investors, and they think that very soon, as the economy shows some slowdown, so very soon the Fed should stop rising rates, so maybe they will rise it to 1.75, 2% maybe, and then they should take the pause and see how the economy performs and what's improvement is coming. But in our report, we are trying to show that why this will not happen. I mean, why no improvement will come. And if Fed stops to rise the rates, we do not suggest that inflation just disappear. So, and it will be really no relief to economy and to the investors if even Fed stops rising rate. When investors will understand that and some really changing in minds happens, that should trigger absolutely different trends as in the stock market, as on the bond market. And that supposedly should happen somewhere close to the end of the year, because until the autumn, United States Treasury has enough of the cash on accounts in the Federal Reserve to balance the outflow and decreasing demand for United States bonds. So they just start burning cash to support the markets and making some disguise to bad processes that we see currently in economy. That's why until the end of the summer, the catastrophe will not be evident. Although if you are taking a close look to the statistics, to the ongoing processes that's going on right now, you will see it. So this we have tried to show in a fundamental report today. On the technical side, with the coming European Central Bank meeting in early June and the anticipation of the rate change, and the technical picture that we see on the monthly chart and the weekly chart would not exclude, at least the technical picture doesn't exclude the chance for euro to climb higher. So, for example, on the daily chart, you could see that market actually has completed first leg up. So market has completed harmonic swing, which is absolutely equal to the previous pullbacks here on the way to the downside. And now it stands at some crossroad. So either it should be downside turn, market keep going lower, or up to minor temporal relief, some pullback, as investors also need to rebalance the positions before non-farm payrolls release. And it's also, this was the tough week. Lots of speeches was in this week, some statistics, so probably in the beginning of the week will be some pullback. It could keep going higher. In this case, 110 area is absolutely okay from the weekly, from the monthly chart. So this retracement will be absolutely normal. So that might be the two-leg ABCD retracement. So from that standpoint, as we are mostly watching here for taking the long position on a daily chart because we have bullish trend, our task will be to monitor the price action around the support areas in coming week. So we are not considering taking the short position. That's why some minor technical details are not important to us, although it might be important if you plan to make some scalp short trades. So this is the major intrigue on the common week, whether it will get this action, this leg, or not. This leg not necessarily to happen on the next week, but in general it might happen within 2-3 weeks. The major question is whether this will happen at all or not. So on the 4-hour time frame chart, technical background still suggests that market should hit the XOP before downward action, because you could see that the pullback was very slow. Existence of uncompleted target should actually attract the price, and EUR should try to complete this target. But as you understand, this is not really vital problem to us, because we are watching for the pullback and we actually do not care whether the market will complete this target and start downward action, or it will start action right from here. The one thing that very interesting right now is actually how market behaves around 106 support, because this level is the first one that we intend to keep an eye on, where theoretical market could reestablish upward action. So the acceleration could come on Friday if payrolls will be really bad, or if wage inflation will show a significant jump. It's also interesting subject to consider in the end of the common week. So that's approximately what we would like to consider. So if you still would like to take the short position here, take care about this target. So it would be better if you place stop above the XOP initially if you would like to take the short position. So here is either to wait when the market will hit it, or if you do not want to do this, wait when the target will be reached, just place stop in advance of the XOP, just to be not washed out occasionally if market will still complete this target and then start downward pullback. For others who are mostly trading on the daily chart, 4-hour time frame chart, it's nothing to do in the beginning of the week, and just let's keep watching for pullback to the 106 and see how market responds to it.